Welcome to Dinar Shift, your trusted source for clear, fact-based updates on global currencies and economic trends. Tonight's report focuses on breaking developments from Iraq and Vietnam that could reshape how both nations approach monetary stability in 2025. Recent policy changes announced by their central banks have caught the attention of financial observers worldwide, signaling a deeper shift in strategy and economic intent. Whether you hold Iraqi Dinar or Vietnamese Dong, or simply follow these currencies for insight into regional finance, What's Happening Now offers a fascinating look at how modern economies evolve under global pressure. Let's begin with Iraq, where the central bank made a decisive move that surprised both domestic markets and international analysts. Known historically for its cautious policy approach, the Central Bank of Iraq recently unveiled new regulations designed to enhance currency stability and restore confidence in the dinar. At the core of these changes lies a stronger framework for managing foreign exchange transactions, with a particular emphasis on tightening dollar movement inside the country. In practice, this means Iraq is enforcing more control over how U.S. dollars are circulated, exchanged, and reported. The central bank's updated oversight rules now require local banks and money exchangers to adhere to stricter compliance standards. Every international transaction must align with formal documentation and verification systems. While this may initially slow down commercial activity, it represents a calculated step toward improving financial transparency and accountability. For Iraq, this initiative isn't about short-term results but long-term credibility. By ensuring that every dollar and dinar flow through legitimate channels, the central bank aims to strengthen public confidence in its financial institutions. Think of it as reinforcing the foundation of a house before building further. It may take more time, but the end result is far more stable. Such systemic strengthening helps Iraq align with international financial standards, potentially opening doors to larger global partnerships in the future. Economic analysts have been quick to interpret these moves as part of Iraq's defensive strategy against mounting external pressures. Over the past year, fluctuating oil prices have disrupted government revenue streams, while inflation concerns have steadily grown. By tightening its currency management, the central bank is effectively insulating the dinar from external shocks. The goal isn't rapid appreciation, it's protection. Iraq's monetary leadership is signaling a shift from reactive crisis management to proactive fiscal planning. This is a notable departure from previous years when Iraq often adjusted policies only in response to emergencies. Today, it's anticipating challenges ahead. That level of foresight suggests a maturing financial outlook and renewed determination to earn global respect as a stable, rule-based economy. For many observers, it's a sign that Iraq is positioning itself for sustainable progress rather than short-lived market reactions. Now, let's turn our attention to Vietnam, where the situation presents a different kind of balancing act. The State Bank of Vietnam has been carefully walking the line between rapid economic growth and steady currency management. As one of Asia's fastest-growing economies, Vietnam has enjoyed impressive expansion driven by manufacturing exports and foreign investment. Yet, fast growth also brings potential risks, including unwanted volatility in the value of the Vietnamese Dong. To manage that, Vietnam's central bank has engaged in what economists call market intervention. When the Dong begins to rise too sharply against other currencies, the bank steps in by purchasing foreign currencies and releasing more Dong into circulation. This process prevents the currency from appreciating too quickly, keeping exports affordable and Vietnam's global competitiveness intact. It's a delicate act of precision, requiring continual adjustments to maintain equilibrium. Imagine controlling a kite in turbulent winds. If you let it rise too freely, it may break away. If you pull too hard, it could crash. That analogy perfectly captures Vietnam's economic strategy. The central bank's focus isn't on making the Dong stronger overnight, but on maintaining predictability and control. For international investors, that reliability is often more valuable than high short-term gains. It ensures Vietnam remains a dependable trade partner and a magnet for sustained investment. Both Iraq and Vietnam share a common objective: financial stability through discipline and modernization, but their paths differ. Iraq is fortifying oversight and reducing external dependency, while Vietnam is moderating its growth to prevent economic overheating. The question many are asking is whether these moves signal potential currency revaluations. The reality is far more nuanced. Central banks rarely initiate sudden value changes. Their primary mission is to promote consistency, not surprise. In Iraq's case, all recent actions point toward building trust, not altering exchange rates abruptly. The same applies to Vietnam. Its policies emphasize balanced growth and inflation control rather than speculative value jumps. The broader goal for both nations is to elevate reputation, to be seen as stable, credible players in international finance. Over time, that credibility naturally supports stronger currency fundamentals without the need for dramatic interventions. For those observing the Dinar and Dong, the key is to watch patterns, not predictions. Stability doesn't make headlines as quickly as volatility does, but it's the true measure of progress. Analysts note that when a country strengthens its governance, reduces corruption, and modernizes its banking sector, its currency tends to follow a steadier, upward path in global standing. That's precisely what's now unfolding in both Iraq and Vietnam. Another important theme emerging from these developments is international cooperation. Iraq, for instance, has been expanding its partnerships with regional banks and the International Monetary Fund. These collaborations aim to improve compliance, transparency, and financial literacy within the national banking system. Each step enhances Iraq's ability to attract external capital and participate more confidently in global financial networks. Meanwhile, Vietnam continues to benefit from its reputation as a manufacturing and export powerhouse. Multinational companies relocating from China are finding Vietnam's economic environment increasingly attractive. This influx of foreign investment supports continued demand for the dong, helping to sustain its value and relevance in regional trade. Together, these efforts form a picture of two nations strategically advancing toward greater economic independence and credibility. From a currency holder's perspective, it's essential to recognize that these transformations are gradual. Policy shifts of this magnitude are more like planting seeds than harvesting crops. Their impact unfolds over months and years, not days. Iraq's digital banking push and Vietnam's export management both reflect long-term planning, a refreshing contrast to reactionary measures that often dominate financial headlines. Speaking of modernization, Iraq's latest step toward digitizing its economy deserves particular attention. The central bank's push for digital payments and reduced cash dependency marks a turning point for the country. Cash-based economies often face higher risks of fraud and inefficiency. By transitioning toward electronic systems, Iraq gains better oversight of monetary flows, improves tax collection, and increases transparency. Such reforms are foundational for building confidence in the dinar domestically and abroad. In Vietnam, policy stability continues to define its monetary environment. Despite global uncertainty, the dong has remained one of Asia's most reliable emerging market currencies. This consistency stems from deliberate, measured management, balancing export competitiveness, inflation control, and international trust. The result isn't sensational gains, but dependable growth. And in the world of foreign exchange, dependability is often the greatest strength of all. Zooming out, these developments align with a larger global trend, the modernization of financial systems in developing nations. As digital integration, compliance, and transparency improve, countries like Iraq and Vietnam begin to shed the volatility that once defined them. This evolution mirrors the early stages of transformation once seen in economies such as South Korea or Singapore, gradual, data-driven, and firmly grounded in reform. Looking ahead to the remainder of 2025, analysts expect both Iraq and Vietnam to continue refining their monetary policies. Iraq may introduce further regulatory updates and digital reforms to strengthen market discipline. Vietnam is likely to maintain its policy interventions, adjusting as needed to align with export performance and inflation levels. Neither appears interested in speculative short-term outcomes. Both are focused on sustainable growth and resilience. The broader global environment also plays a critical role here. Moves by major central banks, like the US, Federal Reserve, or the European Central Bank, have a ripple effect across emerging markets. When US interest rates rise, the dollar strengthens, often creating temporary challenges for currencies such as the dinar and dong. Conversely, when global inflation stabilizes or rates ease, those currencies can regain ground. Recognizing these global linkages helps observers interpret national policy decisions more accurately. Ultimately, what's unfolding across Iraq and Vietnam in 2025 is a story of maturity, not speculation. Both countries are demonstrating patience, control, and long-term thinking. Their central banks are acting decisively to protect economic integrity rather than chase fast results. This deliberate approach reflects a new phase of financial leadership and international accountability. For followers of Dinar Shift, the message is clear: stay informed, stay analytical, and look beyond daily noise. Real progress in monetary systems happens through consistent reform, transparency, and modernization. Iraq and Vietnam are proving that resilience and credibility are worth more than any short-lived excitement about revaluation rumors. As we close tonight's update, one thing stands out: both nations are charting a steady path towards stability. The Iraqi dinar is supported by stronger oversight, and the Vietnamese dong remains balanced through disciplined economic management. Together, they embody a shared vision of progress in a rapidly changing financial world. Thank you for tuning in to Dinar Shift. We'll continue tracking these developments closely and bringing you factual, unbiased updates as they unfold. Remember, in the world of global currencies, fundamentals always matter most. Stay informed, stay objective, and we'll see you in the next report.